Hey out there, thanks for tuning in. I'm coming to you live from New Jersey. It was like 50 degrees out today. March 3rd. Feels like spring is possibly coming back soon. So listen, I want to talk to you guys about hard money loans. I've made a video before about this, but I have an actual deal that I'm going to be hopefully closing on next week, the Brown House. So I have the loan term summary sheet, the LTS. That is the actual outline of all the terms associated with a hard money loan. I've used this lender on, I'm thinking, maybe 6 transactions before. So I'm considered a seasoned investor. So I get the best deals from them. But when I tell you about these deals, you might be like, they don't sound that good, Harry. When I describe a hard money loan to somebody that's not familiar with real estate or borrowing money or business, it sounds like I am getting ripped off. I've had one guy say, I would never do that, not at that interest rate. Let me run the nuts and bolts of a hard money loan by you and tell you why I use them and why you may want to use them. All right. So these are some actual numbers from the Brown House. It's a $225,000 loan overall. I split that up with a $125,000 loan for the purchase of the property. So I come up with a down payment and some other stuff, and that's how much they're lending me, $125,000. Plus they're going to give me $100,000 for rehab costs. I don't get this all up front. But anyway, I want to make sure that I'm telling you guys how this is structured. $225,000 total loan amount. The interest rate is 9%, and the fees on this is 2 points, plus about another $1,500 worth of fees. So in a nutshell, it's 9% interest and they're charging $6,000 in fees. Compared to a conventional loan, I don't know what interest rates are, but I think they're between 3.5%. You look at 9%, you're like, Harry, that's 3 times the amount that I would be willing to pay. Let's see why I use this. Unless you're going to come out of pocket with cash to buy a property like the typical properties I buy, there's not a lot of options out there to borrow on these. Hard money lenders may be the only route to go. Now you may have a 401k or something else that you could dip into for cash, and if you do, great. I really don't like using my money. And I've made videos about using other people's money. The benefits, the leverage, it's there. Here's some reasons why. It's easier. There's less documentation, it's fast, and it's reliable. When I say easier, if you've ever gone for a traditional mortgage, the stack of documentation they require from you is like this big. It's like this big. And they want DNA samples. That was a joke. Hard money loans, what they're looking for is the property as security and not you as an individual necessarily. Don't get me wrong, I'm coming up with some down payment money. But they want to make sure that that property is a solid investment. What does that mean? Me equals getting creative. With a hard money lender, I can get creative with the budget I put together, the out-of-pocket expenses, padding. I don't know if I want to say padding. I get creative with the budget and possibly put a couple extra dollars in the budget. It's my own money, so I'm not like getting away with anything. So here's the numbers on this property. I've given them to you a few other times, but let me just rehash them. I'm winding up being able to get the property for $150,000. I put together a renovation budget of $100,000. I'm going to talk to you about that in 1 second. $25,000 all costs. The 25 is inflated. I really think going in and refinancing this property with the lender's costs and everything else, because I'm holding on to this as a rental. I am not flipping this thing. I think 25 is a little bit high, but I want to give you some numbers so that I don't want to sound too wishy-washy, or I don't want to make it sound too good. It's $275,000 altogether. I already have an appraisal on it with the ARV. After renovation value of $330. Right there, that shows me there's about $55,000 in profit, right? Sounds pretty good. $55,000 in profit. I'm anticipating getting in and out of this place in 90 days and making some positive cash flow for a rental. So $55,000, Sounds pretty sweet, right? So I told you I was going to get back to this. The renovation budget. On the previous whiteboard I had up there, me equals creative. I don't anticipate this renovation budget being $100,000. I mean, if I had only contractors go out there and do the work and I didn't lift a finger, I still don't think it would be $100,000. Remind me I'm saying that after I start ripping up the floors. But in all seriousness, I have padded this renovation budget in order to hit the $100,000 mark. I had to really actually go out of my way to try to beef up this budget, the scope of work. Because what I like to do during renovations is put money in my pocket. So I think I have about $35,000 to maybe $40,000 cushion in this renovation budget. And again, remind me of this when I start ripping up those floors. I know I already have to replace some joists, all the flooring, frame out some of the walls, and I'm probably going to get some subcontractors out there to help me. So even if I went up to 70, I still have another 30. So we were talking about a 55 profit. I really think 30 at least I'm going to be able to put in my pocket during renovations. So if you have to pay 9% interest to a hard money loan, a lender, and you're paying $6,000 in fees in order to get that money, is it worth it to make $85,000? Yes. I'm using other people's money to make money. Now, somebody may have an argument out there. I don't know if they can, but first of all, you can't get a regular loan on this, so you're going to have to dip into your own pocket. So if, like I said, if you have a 401k or you have a savings account around, you're going to have to come up with the whole thing, the purchase price and the renovation. So even if we went back and we were more conservative with the renovation budget, let's say it's 65, you're going to be talking about what? You're going to be talking about $215 plus closing costs. So you'd have to dip in and get, I don't know, $225,000 out in order to purchase this property and renovate it. Wherever your $225,000 is right now, I'm hoping that's invested someplace, making money for you. Then you'd have to take that money out and you would not get like payback on that money while you get the picture. So this is why I use hard money loans. If I can make money even with a 9% interest and $6,000 in fees, and I don't have to dip any more into my pocket than the minimal amount of money, I'm all in. If you want to know more, let me know.